As your company starts to grow, there will come a point that you will need a more sophisticated business setup. In particular, what we'll be looking at today is a traditional setup of a finance department. This video will be useful for not only business owners, but also anyone else interested in starting a career in finance and accountancy and wanting to get a bit more information around this. We will split the job positions into two sections, the first section being the entry-level roles which lay the foundations of the finance team, i.e. the more technical activities. These positions are more focused around data and invoice entry, reconciliations and recording business transactions. And then secondly, we have the more senior finance positions. And these roles focus more on value-add activities such as strategy and development of businesses, as well as tax compliance and corporate governance. In today's video, we will focus specifically on the entry-level technical roles, and we will look to record a separate video in the future about the senior finance roles. Stick around to the end to ensure you get a good flavour of how this all can fit together in your own business. Here is a standard organisation chart of what a typical finance department looks like. A lot of companies may have different titles for these roles, but effectively these are the jobs that are being performed and is the foundation of technical expertise within a finance department. The 5 key entry-level job titles and roles we're going to look into today include purchase ledger, sales ledger, credit control, cashiers and payroll. When I started my own career, I personally held a role in each of these positions before moving on to the more senior financial positions. These entry-level positions will give you the knowledge and expertise to start building your career as an expert in finance and accountancy. So let's start to go through these positions one by one. Firstly, the purchase ledger clerk is the job responsible for processing supplier invoices received from creditors in your business. They effectively oversee the money being paid out by the company that you work for. In modern businesses, invoices are entered into an account software program to capture the value of invoices, as well as record any VAT amounts due to be paid. It is the purchase ledger clerk's job to ensure that these invoices have been issued correctly for works that have been undertaken for your company and that they are coded to the correct expense account on the system. Once all the invoices are on the system and approved, the purchase ledger clerk will usually reconcile the invoices that have been posted to the ledgers, and they'll check that to a supplier statement. This is a cross-check to ensure that everything is in order and also check if any invoices may be missing off the system. Following these checks, they will then action payment of the invoices to the various suppliers. If there are any queries with the invoices, the purchase ledger clerk is usually the first point of contact, and they would generally liaise with other internal staff members to resolve any such issues. The next position we'll look at is the sales ledger clerk. The tasks that this role performs are very similar to the activities of the purchase ledger clerk. The only difference is that the sales ledger will be processing invoices on the other side of the business. And this is where we deal with clients and what we call debtors. The sales ledger clerk will liaise with the operations team, and depending on whether your company delivers products or services, the clerk will raise your sales invoices upon completion of your services or upon delivery of your products. Once again, they must have a good working knowledge of VAT, as the correct rate of tax will need to be applied to the invoice accordingly. Then once the invoices are raised to the system, it is the responsibility of the credit controller to chase these for payment. And by the way, don't forget to hit the like and subscribe button and let me know in the comments if you are currently working in any of these roles we're running through today. This leads us nicely to the next role, the credit controller. Credit controllers manage your company's outstanding debts from customers who buy the goods or services on credit from your company. They will liaise with the sales ledger clerk in order to recognise which sales invoice has been raised and which are outstanding. Other tasks they would generally do include credit checking and arranging payment terms for customers, chasing and collecting payment of unpaid and overdue invoices, as well as taking legal action on customers as a last result should payment of invoices that have fallen overdue not be subsequently paid. Ultimately, the credit controller is responsible for reducing the risk of bad debt, ensuring that payments are made on time by clients, and improving cash flow of your business. The next role we're going to look at is that of the cashier. In larger organisations, due to the number of daily bank transactions coming in and going out of the business, a cashier would be employed to manage these transactions. The cashier will allocate all payments and receipts to the accounting system to specific invoices being paid or settled. Once this is complete, they will then undertake a reconciliation of the account, comparing the bank statement to the bank transactions on the system. This will then highlight any variances which will then need to be entered or corrected on the software. If your business operates a petty cash system, then the cashier is generally the member of staff responsible for managing this. They ensure that cash paid into the petty cash or paid out is recorded appropriately with a receipt as the backup. And you'll need your receipt should VAT be claimable on the transaction. And then we have the payroll officer, who is the person responsible for the company payroll. This role has become quite specialist and complex over the last several years in the UK, given the introduction of RTI, which stands for real-time information. This, along with statutory requirements for businesses to pay into pension schemes for employees, also known as NEST. The payroll officer will work alongside your business HR manager in order to capture new starters or leavers in order to be able to process them accordingly within the payroll. In a smaller company, it's not unusual for the HR manager to also be responsible for processing the payroll. If staff have any queries with their pay, then the first point of contact will be the payroll officer, whose job it will be to investigate any errors in tax code or errors in the amounts that have been processed for payment. I hope you've gained a better understanding of the entry-level finance and accounting positions within most organisations. As your business grows, this should give you a better understanding of where some of these roles can fit into your organisation. I hope you enjoyed this video. Please feel free to view some of my other content, which I believe you'll also enjoy. Thanks again for watching. I look forward to seeing you in the next video.